So I've been selling daily calls and puts on the SPY now for 267 days. And although I think I've done pretty well, I've definitely made some critical errors that if you are thinking about selling calls and puts or doing daily day trading with the SPY, you might want to listen to. Okay, so this journey started back on 11/21. This spreadsheet is available to all of my Discord members if you want it, so you don't have to make it, no big deal. Kind of get an idea of what we're looking at across the top. This account started with $87,000 in it, I believe. We'll go back and look. So with an $87,000 account, obviously I can't be buying 100 shares of the SPY. So full disclosure, this is a margin account. And if assigned on my calls and puts, I will be using margin throughout this entire video. Now, if you've been following along for any sort of time, you know that that was pretty much a big no-no for me, really up until this challenge. And I don't know what really changed my mindset. Maybe it's more where I'm at with my net worth and I could take a little bit more risks now. But the margin thing was definitely something that I needed to get used to. And contract size was something that was really the first hurdle inside this whole challenge for me. I couldn't balance whether I should be doing multiple contracts at a really, really low delta to get a certain amount of premium that I wanted, or if I should stay really, really close to the money with less contracts and really have a more likelihood of getting assigned, a larger delta, if you will. And here's really the first thing that I did learn over time. It is better for me to write contracts with a higher delta and less volume. So for example, instead of doing 4 contracts like I started this challenge out with, I did 4 contracts at a delta of like maybe 0.15, like less than 0.2. But when things went bad, they went really, really bad. And I'll show you the chart, the whole P&L chart of this whole entire 267 days. What I found is when I got assigned on those 4 contracts, it was a ton of margin and I was almost getting liquidated immediately. I was getting margin called as soon as things would go badly. And really what that inhibited me from being able to do was bag hold. It was not allowing me to hold shares because the SPY is going to recover, right? And we just went, this was like right before the market just went down. It pretty much didn't allow me to hold on to shares during a big pullback because I was getting margin called. So I was getting signed way up here at a strike and then being forced to sell my shares down here at a net loss. All right, where now with trading 2 contracts or so, if I get assigned, I have more buffer for pullback, and that's allowing me to hold trades when my puts get assigned that now I can rebound, and when getting assigned on my calls, I can write above my basis, and things have been a lot better. So just if you're going to be dabbling margin, know that when you get assigned, there is going to be a margin call. And in my opinion, for this day trading strategy of the SPY, I found it better to sell really, really closer to the money with less contracts and get the equivalent premium that I would with 4 contracts at a smaller delta, if that makes sense. Now, I will get back to the chart and show you all the numbers, guys. But like I said, for the people that are here strictly for the lessons, I just kind of want to tell you the lessons that I learned. The next lesson I learned was do not be afraid of assignment. You will see on the chart here in a couple minutes that all of my losses, or all of my really, really big losses that have set me back now, they all came because I was afraid to get assigned and because I did not want to hold those shares. I kept rolling or closing at a loss instead of just taking that assignment. And that's back to the margin thing. At first, I figured I needed to close for like a $2,000 loss on a big pullback because I was not sure how I was going to handle $400,000 plus of margin. And that was a lack of education on my part and me just frankly being an idiot and kind of FAFO. And I found out the hard way early on in this journey. You will see towards the bottom of the spreadsheet, I get assigned now maybe once, twice a week at least. And that has helped mitigate a ton of losses over time. The next thing I learned, guys, is bag hold if you need to. Like I said, back to that margin thing. Give yourself enough wiggle room with your margin if you're going to use margin that you can bag hold. And I do this with the SPY because I am pretty confident that over time, maybe that time is 1 to 2 years, it's going to come back to where, like, we just had one of the worst pullbacks we've had in a while, and now we're trading again at all-time highs like 6 months later. So don't be afraid to bag hold, and bag hold if you need. Rule number one of the wheel strategy, selling calls and things like that, is do not sell calls below your basis, because when you get assigned, you're going to take big losses. And those losses are going to be bigger than the premium that you've collected previously. And that's why you see, for me, the insane amount of premium that I've gotten in the last 267 days that has been completely offset because of those few times I sold below my basis because I needed to, whether it was a margin call or I got flustered when it was pulling back. And now I'm just working to recover all those capital gains losses that if I just would have, bag held a little bit and waited a little bit longer, my position would be way different. The next thing, and which kind of been like the laughing joke inside the Discord about this challenge, guys, sometimes your timing's going to suck. Sometimes you're like, I got this thing, I want to try doing this thing, and then the markets just, they go to shit. Like, go back and look at the chart of the SPY from 11/21. Maybe I'll try and look at it and flash it up here. But literally, I was like, I'm going to do this going into 2025. And then as soon as 2025 hit, it just, boom, markets just pulled back like they are going to do, right? We were at all-time highs. They pulled back and corrected a little bit. If I would have got to the bottom of that correction and been like, this is never going to work. This is not going to work. And I would have quit. I would have been down tens of thousands of dollars inside this challenge. But because I kept learning and working and knowing, all right, if I tweak a couple of things and the market does not make these huge volatile swings up or down, that I think over time I can chip away. And that's exactly what I've been doing since we've hit the bottom. So just know that sometimes market timing is going to suck. And if you are going to stop doing things or you're going to switch to something else, I think it would be in your best interest to really look, zoom out and say, hey, how would this strategy work if the markets were going in my favor or they were going the right way? Because I found, especially in day trading futures and things like that, when people keep jumping strategies, they tend to always lose. You need to put time into your strategy and you need to learn and make some of the mistakes that we've made. And unfortunately in this game, those mistakes come with capital loss. But if it's the right thing and you're confident, I think over time, you can be the judge when you see the numbers at the end. And the last thing that I want to touch upon quick before I show you these numbers is take your calls early and often if you're using margin. When I was not using margin and I was wheeling Google and I would roll up and out calls all the time to benefit from those capital gains. And I thought with this day trading strategy, I could do the same. Like if it went in, I would just roll it up and out. I'd collect some more premium. Awesome. But what I didn't factor in was every single day I was paying margin. And when I kept rolling and then it pulled back, I lost potential capital gains that I could have grabbed on top of paying margin fees. So in this game, when using margin, puts are free, right? Because we're not taking any margin to use collateral to write puts. But in the calls, that side, you have to think about the margin. So I tend to not roll my calls anymore. I take assignment. I make sure they're above my basis so that I can grab capital gains and chip away at the huge losses I had in the beginning of the year. And then I can continue to just keep doing the same process and also avoid some of those margin fees. And I will also show you exactly how much I've paid in margin as well this year. All right, so here is the chart that we've been waiting to see. Started off great. Like, look at me. I'm a hero pretty much up until mid-December, so a couple weeks that we were doing pretty good. I got myself $146. I was kind of just figuring things out. Those were with one contracts, and then greed started to come in. On the trade number, you can see the number jump is how many contracts I took. So I took one contract, and then it went to two. And then it went to two for a little bit. And then it went back to one. And then before we know it, I'm jumping up to 4 contracts in the middle of December. And we can see, I think the first time I took 3 here, I took 3 here, and then I took my first fourth right here on line 21. And the first time I took 4 contracts, I got smacked for $3,600 that I had to buy to close. I had to buy to close at a huge loss. And back to what I said, I had to buy to close at a huge loss because I knew that if I took assignment on 400 shares on margin, I was going to get liquidated immediately. And we can see just from the strike price, the price went from 600 to 577 pretty much overnight, and that was the start of a major pullback. We got back to some green, but we can see a $3,600 loss does not offset premiums of 100, 400 even, 300. And this continued to happen through January as the markets continued to pull back. So in the month of December, I had a $1,600 loss in just premiums. I'm going to separate the numbers out to my capital gains for this, because a lot of times when people talk the wheel, they just talk premiums, but they don't talk about the capital gains and loss. So I'm going to show you the capital loss, I'm going to show you the premium, and I'm going to show you the margin to come up with like a net amount of income for this particular strategy that I've been using for the last 267 days. Kind of bounced back a little bit in January and got myself $110. And then in February, I got $1,200. And then you can see big green, okay? And really what that was kind of shrinking down contract size, going back to 2, up to 3, and really just being a little bit more focused and saying, okay, I think we can handle this. I think we could do it. But you can see now, by the time we get to March, I took 3 assignments in March, which I had not done yet. All right, so I took 3 assignments in March, and look what happened. I got myself $2,051. All right, I took another assignment in April, $500. I took assignment in May, $2,600. And we can see these losers now are small. Okay, these are small losers, 849, 222. Now we get into June. Look at how much I am now getting assigned. And I sold the next day because this was one of those where, let me see, I had 2 contracts open. I pretty much got assigned on my puts, 593. And then I believe it jumped up pretty high overnight. And I pretty much sold them at market open to kind of get myself a little bit of capital gains. This right here is a put that was assigned. And then what date was that? That was 6/17. And then it was pretty much, looks like it was the weekend, Monday morning. I signed that back at an equal price, but I got myself $1,700 in premiums. Once again, we're back now just selling 2 contracts a day at a pretty high delta, probably somewhere in the neighborhood of like 0.35-ish. And $2,600, like I said, going back here, $500, $2,600, and I'll show you the average per month. 17, here's $1,600 in July, but look at pretty much every single one of my trades now is getting assigned, and that's back to like getting my calls and not rolling my calls and letting those calls get assigned for capital gains above my basis, as well as letting puts get assigned because I have smaller contracts, and that way I can just pay less in margin fees. So now that we get to the bottom, and you can screenshot this or you can jump in the Discord and you can see. And also, guys, too, I manually put all this stuff in. I might be off by $1 or like some of my cells might not total. Actually, I could probably sum them up. But like what I'm saying is you don't have to be comment police, all right? These are done every single day inside the Discord. Those people, which are my people, know that it's legit. Here's the account size I started with, 87.7. This is how much premium I've made. 9,300 in 267 days. This month so far in August, I'm up around 877. So even with these huge losses that I had in December, which has been my one red month so far, I'm averaging $935 every single month doing this strategy, even with that learning curve in the beginning. So that's pretty much going to line up to somewhere around $12,000 a year in premium. And as that snowball goes and I can continue to scale it, you guys can start to do the math. Here are the lessons learned that I just talked about. We can see my average contract size. Really what this is this is I-138. So this is this 9,300 divided by how many contracts total I've sold. 288 contracts. That's with the reds and with the greens. I'm averaging $33 a contract. Here's the margin paid broken down by month. March, April, May, June, July. You can see I'm limiting the amount of margin I'm paying by taking those calls early and often, okay? Where did I write that? Take assignment on your calls early and often to avoid margins fees. That's kind of what I've been starting to do. Total interest paid, $27.44. That's what this column is here. The capital gains, right here, minus $12,000 in capital gains. The big one right here, this is 326 to 422. So if we go to 326, we can see that's right here. I put a put for 474, okay? And I was assigned at 474. Now, that call was then assigned on 422 at 526. 526. All right? That's how fast the markets went from 3 in less than a month, from 74 to 26. Let's just make sure that's right. 574 to 26. That was a huge loss. And that was on 200 contracts. We can see I dabbled in the 400s, but this is when I didn't have a chance to bag hold, right? I bought the 400 on assignment, and then boom, they were like, we're taking 100 back, and we're taking another 100 back. And we could see I got assigned at 587. They took them back at 562. Big loss, $2,000 there. Then they took back at 565, a little better, but still pretty bad. Then they took the rest at 574. So these reds right here on the 400 contracts and things, I've been chipping away 200 at a time, but all of these have been above my basis and green trades. Assigned at 588, sold them back for 591. Bought them for 593, sold them back for 598. And slowly over time, I've been chipping that down. So here's kind of why I'm still continuing. You're like, why would you still continue if you are currently down $5,500 on this project? Well, because I know that I can clean this 12 grand up, and I know that this can continue to rise. And the margin is just right now okay with me because, like I said, I'm using smaller contracts. So I know that it's probably days till even, probably another 170 days or so until I get to even, which is going to be a little more than a year on this project to start over. But I will take breaking even over the course of a year to maybe next year potentially make $12,000 to $15,000 in premiums. And this takes 2 seconds. Like for the people on my Discord know, I post at 9:33 every day. Market opens at 9:30. I look at it, but it takes me 3 minutes to log into Fidelity and get everything going. And that's it. And then I just let it sit. So this is not time consuming. There's going to be someone, oh, you're picking up pennies in front of a steamroller. It's not like that for me. It's very, very quick. It does not take up any time. And this is just going to be something that I'm just going to need to build back. But I'll take, right now, I'm looking at the 93 minus the premium. I consider myself up on this project about 7 grand right now in the last 267 days. Yes, I still have capital gain loss, but that will come back to help me. And also, guys, capital gains losses helps with taxes in other places. So sometimes capital losses are not the worst thing, but I will definitely, maybe I'll update you again when we get back to even, guys. I know that I haven't been making videos. I take off for the summer, but summer for me is over, so we are back. I also need to make an update video of the poor man's covered call. You see that tab down here? That goes in line with that video that I made with the poor man's covered call masterclass. There's a lot going on with that as the markets have continued to soar. You can imagine what that long call looks like. It looks good. But yeah, thanks so much for your continued support. If you have any questions about the SPY wheel, or if I missed anything, or if there's a typo or numbers wrong, please let me know so I can leave a link and fix everything up. If you want to jump in the Discord, I will leave a link for that below as well. I'll catch you on the next one.